Hello and welcome back to Eagles FS. So this is threat analysis on the trade that I took on Euro JPY using my strategies which I have taught you guys in series of my videos. If you have not watched it, go to my YouTube channel. You will see that video that I explain how I take my trade and how I exit my trades. Okay, so this trade is what I will do in this video is to analyze what I did before taking this trade. So if you like this video, drop it in the comment section if you would like me to be doing this type of video, analyzing and recapping my trade. Every trade that I took, I'll do a video on it so that you learn one or two lessons from this video. So let's get down to the chart. So the first thing you want to do in a chart is to go to higher time frame. Okay, you can use your daily time frame, you can use your 4-hour time frame. These are two time frame that you can do analysis as an intraday trader. So this is a daily time frame. So in this daily time frame, what do you notice? The first you ask yourself is, what is the direction of the market? So you notice that the direction of this market is uptrend because the market has breaking above this zone. This is lower high. When this market was coming down, it created this low here, created this lower high, and created equal low, that is double bottom. And price has come up and break above this double bottom. Okay, testing this level of resistance, and immediately price came back again to test the neckline of this. This is the neckline of this double bottom. This double bottom you are seeing here, this neckline. Immediately this red candle drop inside this zone. This thing happened on Friday. Okay, this thing you are seeing here happened on Friday. So when I see this red candle happen here, so in my YouTube weekly video analysis, I analyze this pair, telling my community that once market open on Monday, that will start looking for a price action here. That once we see a price action on our entry confirmation, that we should buy this pair because this pair will keep going up. So after seeing this on a daily time frame that the price is going up, we'll now move down to 4-hour time frame. So let's go to 4-hour time frame. So this is 4-hour time frame. So when I notice on Monday that price, this 4-hour time frame, this green candle, let me show you. So this green candle happened on Monday, this bullish engulfing candle. So when this bullish engulfing candle happened on Monday, I said, okay, that the bulls are about to take over from the bears. So I said, okay, if you take this trade from this zone and put your stop loss below here, that will make your stop loss to be big enough. So I decided to do what? Go down to a lower time frame. In this case, I use 15 minutes time frame. So let me highlight this 4-hour candle so that when we go down to 15 minutes time frame, you see it. Let me highlight it with a line to demarcate it. So let's go down to 15 minutes time frame. So let's look for it. So this 15 minutes time frame. So this movement you are seeing from this zone is that entire movement that happened on a 4-hour time frame. From this zone to this zone. Okay. So this is that bullish engulfing candle that you saw on a 4-hour time frame. So when price go to this zone, price started doing or dropping, doing lower low, lower high, lower low, lower high. Okay, created lower low, and they also created a lower high here and dropped to create another lower low. Okay, so not until this lower high is taken out. Let me show you when I started. So when price created this lower low and it was taken out after the lower high was taken out, let me show you. Let me use you see this place, let me mark it. And it was taken out by who? By this green candle here. Okay, so when this thing happens, when this lower high was taken out, okay, I now bring out my Fibonacci tool, as I have taught you guys that whenever a structure is broken, you use your Fibonacci tool to measure the retracement before buying. I always tell you guys to buy from a discount area. It's just like when you go to a supermarket to buy things, you always like to buy things at a discounted price. That's normal behavior of human being. The same thing you do in your life, normal life, that's what you'll be doing in your forex here. Okay, always buy at a discount prices, okay, and sell at a premium. So whenever you see a price break up close above any structure, use your Fibonacci tools to measure the retracement before you buy or before you sell. So I bring out my Fibonacci tool from swing low to swing high, and I see the swing high. This place, this red candle is the swing high. That week is our swing high. Okay. So you notice that the retracement started from this zone and ended here when this retracement was coming out. So when I mark this in, the first thing you do, your point of interest. Let me highlight your point of interest now. So when this thing happened, I highlighted the point of interest. From this 50% retracement from this place, this 50% retracement to this place, are you seeing it? Is my point of interest. Okay, I highlighted it like this. So inside this is my point of interest. Now, what I'll be checking is what are the institutional reference point inside this my point of interest. I'll now ask myself first thing, do I have order block here? Do I have fair value gap here? Do I have mitigation block here? Do I have breaker block here? At least these four institutional reference points. That's what I will start picking out one after the other. Okay, so let's go. Just follow me. This red candle is our order block. You see this red candle? This red candle. That is our order block. This red candle is our order block. Okay. Now inside this red candle, that is our order block, there's another thing there again, which is fair value gap. Let me highlight it. I hope you guys, let me make this in bigger now so that you see it. I want you guys to learn these things so that it will be easy in your trading journey. Once you master this thing, taking trades will be easy for you. Let me make this in bigger enough. Okay. So we have highlighted our order block. So let's highlight our fair value gap. So this is our fair value gap. The distance between this green candle and this one. Okay, that is our fair value gap. Now, I think we are seeing it. I will use another color to do this fair value gap. So this is our fair value gap. Let me shade it with another color. Okay. Now, what again do you notice? Let me show you. Let me show you our breaker block. We have breaker block. Let me show you. So when this price was, it moved like this, it moved like this, it moved like this, it moved like this. There was a change of character here, and also there's another change of character here. Do you notice what I'm showing you? Let me bring it out so that you see here breaker block. Okay, so when this price break below this zone, okay, the last green candle that when this price was coming down here is your breaker block. When it break this zone, when this place was broken. Okay, are you with me? The last green candle that traded here, this zone here now, the last green candle that traded here when this price was coming down. Hmm? Let me use color. Let me color it with any color so that you notice something. This zone, the last green candle that traded there is here breaker block here now. So here now is our breaker block. This green candle here now is our breaker block. Let me highlight it. I hope you are seeing what I'm doing here clearly. I'm teaching you these things free of charge so that you learn it. This is our breaker block. you extend it. Let me change the color. Let me use this. No? Okay. So you notice one thing now. This color is too clustered. Let me change it again. Which other color will I use? Okay, let me use this color. Fine. So have okay. Let me also change this. So let me remove this point of interest. Let me remove it. Fine. So we'll have breaker block. We'll have fair value gap, and we'll have order block. Okay. Whenever I see price do this thing like this, always use your breaker block. This is our breaker block now. This one on the brown color is our breaker block, and this one is our fair value gap, as I told you. And this one now, this plain one now, is our order block. So whenever you notice this type of price action, when this thing happen here, okay, always use breaker block. That is the institutional reference point that you use for your trade entry. Always use breaker block, okay, because breaker block is more effective in terms of this type of price action. So let me remove these things so that the chart will be clean again. Let me remove it. So exactly when this thing happen, I now put my pending order using this breaker block. I use pending order using this breaker block. So we are longing at the tip of this green candle. That's when I enter. Enter is around 708, and there was no drawdown. And I put my stop loss below this zone. Okay. So let me remove all these things so that the chart will be clear again. Let me remove it. And our take profit. Let me show you. My take profit is at this zone. The liquidity at this zone. I know the market will go there to draw those liquidity. This is my take profit. About 100 pip from 70 to something. Yeah. So let's play this now and see whether we'll meet our target. So the market came and tapped me in. There was no drawdown, and we started moving. Okay, and you can see it. Our take profit was hit. So and when this thing happened, I show it to my communities. So let me show you so you understand this thing. I think this is the, yeah, this is the thread here. This is the thread. You can see it here. This was when I entered the thread. Okay, and I told them that I'm still holding Euro JPY. We are up 43 pips at this zone. You can see my entry 163.707. That was my entry, and that's at that time we have moved 164.131. At that time I was telling my community what to do, how to manage the trade, because I guided them. And I told them, when price, see, when if price break the higher low and close below the trend line, close Euro JPY. That was what I told them. You can see it here. That was when price was at 164,500. That time we made over 80 pips. Okay. So basically, this is how you can take your trades with ease of mind without having any problem. If you understand this price action, you make a better decisions when taking your trades. So if this is your first time of coming to my channel, kindly subscribe to my YouTube channel. Like this video and drop your comments. Tell me in your comment section if you like me to be sharing this type of content. Also, we have our free Telegram channel where you can do what? Join us and participate as a family, because I drop signals there free of charge. See you guys in my next episode. Cheers.